Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition where we are going to be talking about the HCLTech's Q3 earnings, as well as to understand how the outlook is like going forward from here. First up, to abreast all our viewers about what the key numbers have been. Remember, the profit after tax for HCLTech has grown by 5.5% on a year-on-year basis. This has come in at 4,591 odd crore rupees as well. Revenues have also increased by over 5%. That's 29,890 odd crore rupees. The EBIT margin has stood at 19.5%. That's reflecting a 90 basis points increase Q on Q, but there's a 25 basis point decline on a year-on-year basis right here. The company is also declared the interim dividend, and 18 rupees per share is what the shareholders will be getting this time around as well. So a lot to discuss with the top management about as to how things are shaping up. We are now joined by a very special person. Mr. Shiv Walia joins in. He's the CFO of HCLTech. Warm welcome to you, sir, and thank you so much for taking the time out for this discussion. Happy New Year to you and to the entire team of HCLTech, sir.
Thank you, Sakshi, and it's a pleasure. Thank you.
Thank you so much, sir. Well, another quarter, this Q3 has actually been a seasonally strong one for you, even though there have been a lot of furloughs and a lot of holidays that actually mar this quarter. This time also, we've actually seen growth on both accounts, profit as well as revenue front as well. Do tell us, how have you on your own assessed the quarterly earnings? Where has it met your expectations? Where has it exceeded? And where do you think still marked improvement needs to be done, sir?
So, as I said, as you rightly pointed out, we delivered industry-leading growth in this quarter, constant currency term, 3.8%. And even if you take out the contribution which HP Assets Acquisition had, the growth is 3.3%. Very good growth on the back of strong Q2 we had. Services growth is 2.2%. And again, organic growth is 1.7%, much better, very good growth, again, on the back of very good Q2 we had. Margin front, we expanded by approximately 90 basis odd. Despite around 80 basis point impact, we had wage hike, what we announced at the last quarter. It came in from 65 to 80 was the plan, but it came in at 80 basis point. Furloughs impact, because the impact was around 40 basis point, and that HP CTG Assets Acquisition initial integration as well as some amortization we have to take that had an impact of around 20 basis point, but most of that got negated by the 100 basis point benefit we got from the Project Ascent, which we launched, that efficiency, improve efficiencies. We launched 5-6 months back. So yes, overall quite good, overall well-rounded performance. And the best part was it's a well-rounded growth, almost in all sector areas. So that's a good performance.
Okay. So you did talk about margins. So let us expound that a little bit more. On the margin front, you did say 80 basis points was an impact due to the wage hikes. I want to understand, will there be any further impact that can be seen on the margin front even in the last quarter of the current fiscal year as well? Or do you think this is done with the kind of the year impact of the wage hikes on the margins? Because you've also kept the margin outlook intact, I wanted to actually understand, will there be further levers to see yourself growing further than the 18 to 19% band that you've made, sir?
So yes, as we announced in the earnings calls last quarter, that 65 to 80 was the plan for this quarter. It came in 80 basis point wage hike. For next quarter, the senior management will get the wage hike, and we expect the impact somewhere between 50 to 60 basis point. And that's part of the plan, and it's already baked into our forecast margin guidance of 18 to 19%.
Right. Also wanted to understand from you, sir, as far as the outlook is concerned, you have raised the lower end of the guidance on FY25 revenue front to about 4.5% to 5% from the earlier guidance, about 3.5% to 5%, sir. So tell us, where is this optimism really coming in from, sir? and what is going to be really different from so far that we have been seeing, that you believe at least the guidance has been increased, sir?
So, we last quarter, the guidance was 3.5 to 5. So midpoint was 4.25. In
Yeah.
fact, we have kept the guidance for the organic 4.25%. Guidance is intact for us. And on top of that, 50 basis point contribution is coming in from this HPE CTG assets acquisition. So net, that's how we are now saying that growth is going to be 4.5 to 5%.
Okay. So we're also going to be seeing a remarkable change in the US with the new government really coming in on the 20th of January with Donald Trump taking office. I wanted to understand, since a large part of your revenues comes from the US as well, how do you see things changing, A, for the larger Indian IT sector as a whole? Are there going to be any policies that you are particularly expecting that could have an impact there? Or do you see things improving for the sector as a large with the new regime coming in?
So it's bit early to take a call on this, but all I can say, I think there is some with the rate cut, which we were expecting, would have some, good. We saw some good momentum coming in from towards the end of last quarter and continuing in this quarter despite furlough quarter for us, which is seasonally, slightly weaker quarter compared to the previous quarter. Overall, what we are seeing, all the verticals are doing seems, okay. I think we are seeing some upticks, except maybe I would say healthcare, and healthcare is the area where I think slightly weaker situation there, but maybe they are coming out of inflationary situation. So other than that, things looking good. So I think that's what I can say. I think, but yeah, good.
So, any pressures in terms of pricing, sir? Do you see contract renewals getting challenging at this point in time? Is there any hint of that, or do you think things are smoothing out?
I won't say much change in the situation. Yes, but it's maybe, as I said, what we have seen. The deal tenure is, what we announced is now it's coming down, and slightly the large deals, which are taking some time to materialize, but which is also, but if you have a ACV going up, that effectively means that the realization of revenue is going to be faster for you, because let's say if the deal tenure is 1.6 to maybe 3 years, then definitely everything will get you can realize faster in the coming quarters. So that's the change we are seeing, but otherwise, not much change, I would say.
Okay, sir. So has there been any impact of the depreciating rupee? We are seeing record lows being made on probably a weekly basis and maybe on a daily basis as well for the Indian rupee. What is the impact that you're seeing right now, and how do you foresee the rupee move going forward, sir?
It's difficult for me to how things will span out in terms of
Sure.
rupee. But yes, dollar index appreciated last quarter, and that did give us around 18 basis point margin benefit in this quarter. Because the large part of our cost is based out of India. So that's the benefit, I would say, with if the rupee is depreciating, so that gives us some advantage in the P&L.
Okay. So also wanted to get a sense as far as your hiring plans and your attrition is concerned. This time around, we've seen slight uptick in the attrition levels. Is that a concern? Is it still at the comfortable zone? Would you be okay with the kind of level that is coming in? And of course, how are you really looking at the hiring plans going forward?
So first of all, attrition, I think slight uptick which you saw, which is understandably, was expected because of the uptick in demand we are seeing, since towards the beginning, towards the end, later part of the last quarter. So, but this is within the range which I think we think we are comfortable. So I don't see this as a challenge, and I don't see any issues there.
And
In
hiring
terms
plan, sir?
a
Yeah.
hiring plan, I think as we announced, we added around 2,000 freshers this quarter, and plan is to have another maybe 1,000 or so in next quarter. But with the some uptick we are seeing in the demand environment, so we definitely plan to hire higher than what we have hired freshers in this year, and we are in the process of working that out. So yes, I think we will have a higher number of freshers joining us next year.
Okay. So the company secured about 12 deals in this current quarter that we are discussing. And while most of the research analysts have also pointed out that deal pipeline is at a record high, which is a positive. Duration of the deals is decreasing right there. Could you explain to us what this means for the company as a whole, and how does the deal pipeline look forward from here, sir?
So as we announced yesterday, the deal pipeline is for us is the all-time high. I think the last time we had similar situation when we signed the mega deal. So it's I would say the second best we have. So this is looking very good. So I do expect some outcome of this getting in terms of better order booking. And as I said, we announced that deal ACV has gone up for us year on year by 23%, which is also that means faster realization of revenue, and that's what I would say. It's a good thing. And next quarter, hopefully, we'll have slightly some good deals coming up.
Okay, especially when we talk about Gen AI, sir, what is the outlook? Could Gen AI drive the deals going forward from here? What is the kind of demand that you're seeing of this? By when do we see you probably calling out, the Gen AI bit revenue contribution to your overall top line, sir? By when do we see that happening?
So almost in all deals, especially the large deals we are signing, we are seeing a definite component of GenAI. You cannot have any large deal without. So for us, I think at the beginning of the year, we said that, okay, we are going to train around 50,000 of our colleagues in GenAI skills. But so far, we have already achieved around 75,000 employees of our colleagues getting trained in GenAI. But for us, it's more than the skill set, but also how do we develop use cases, which we can deploy in customer environment and give them the productivity benefits. So that's also good. I think is moving along quite nicely for us.
Okay. In the end, sir, do tell us, when we look forward beyond the last quarter of FY25 into the new year as well, how do you see things shaping up for the IT sector and for yourself? How do you see improvement in the demand scenario really shaping up? And of course, like I asked you on the margin front again, do you see yourself going beyond the 18 to 19% band, sir?
I think, as I said, we are seeing some broad-based, the demand picking up. But for us, the next year, I think hopefully it will continue, and we do see, the momentum coming to the next year also. Difficult, for us. I think we will, when we meet again in April quarter, that's the time we will give you the definite revenue guidance as well as margin guidance. For us right now, we are focused on delivering the revenue number, which is 4.5 to 5% year-on-year growth, as well as 18 to 19% margin for this year.
Okay. Lastly, sir, the company also reported its highest ever cash balance of upwards of 27,000 odd crore rupees. Now, we do see this was also fueled by higher cash conversion compared with the net profit and the expanding return on capital employed. Now, do you see this coming handy for yourself as you go on to select probably an inorganic route to add capabilities in newer technologies to stay ahead of competition? Do you see that happening? Do we see anything constructive coming in over the next 3 months or so?
Not in the sense that's not something I can discuss, but we have been very selective in this space. As I said, our stated objective has been deliver organic growth, but add some tuck-in kind of assets which can add to our overall story. I guess that has been our focus all along.
Okay. Well, thank you so much, sir, for being with us on this special edition to detail for us the earnings fine print. I wish you all the very best for the upcoming quarter of fiscal year 2025. And we will be seeing you very soon back on Business Today Television to listen in on the vision going forward from here. Thank you so much.
Thank you.
Appreciate your
It's a
time.
pleasure. Thank you very much.